Michael Saylor stands at the precipice of financial history. His company, MicroStrategy, already holds 461,000 Bitcoin, valued at over $46 billion. But this is merely the opening act in Saylor's grand performance. The 21-21 plan, Saylor's magnum opus, aims to raise a staggering $42 billion over the next 3 years to acquire even more Bitcoin. This bold strategy to double his Bitcoin holdings could redefine corporate finance, challenging traditional notions of treasury management and potentially reshaping the global economic landscape. Saylor's vision transcends conventional corporate strategy. He's not just accumulating Bitcoin, he's orchestrating a financial revolution. The implications are profound, potentially altering the very fabric of how businesses approach wealth preservation and growth in an increasingly digital world. Hey everyone, welcome back to Bitcoin Basics. This episode is brought to you by your personalized Bitcoin brokerage, Caleb & Brown. Now, let's get into the MicroStrategy Masterplan. The genesis of a Bitcoin visionary. Michael Saylor's journey to becoming a Bitcoin visionary began with a profound realization. As the CEO of MicroStrategy, he had long grappled with the challenges of traditional corporate treasury management, which involved saving money in US dollars, a melting fiat currency. But it wasn't until he took a hard look at the company's financial position that he truly understood the magnitude of the problem. Traditional assets were failing to preserve wealth in an increasingly inflationary environment. Cash, once considered the safest harbor for corporate treasuries, was rapidly losing its value. This realization sent Saylor on a quest for alternatives, a search that would ultimately lead him to Bitcoin. Initially in 2013, Saylor viewed Bitcoin with skepticism, seeing it as a speculative and volatile asset. As he delved deeper into its fundamentals, his perspective underwent a dramatic shift. He began to see Bitcoin as a revolutionary store of value for the digital age. This epiphany challenged his long-held beliefs about corporate finance and wealth preservation. Saylor's journey to Bitcoin adoption was not without personal struggles and doubts. He found himself at odds with conventional wisdom, facing resistance from those who couldn't yet see the potential he envisioned. In many ways, Saylor's experience mirrored that of historical figures who challenged established beliefs, facing skepticism and opposition as they presented revolutionary ideas. The internal debates at MicroStrategy surrounding the first Bitcoin purchase were heated and contentious. Some executives argued that such a move would be irresponsible and could jeopardize the company's financial stability. Saylor, however, remained steadfast in his conviction, presenting compelling arguments to support his vision. As Saylor's understanding of Bitcoin deepened, so did his belief in its potential. He saw beyond the day-to-day price fluctuations, focusing instead on Bitcoin's long-term value proposition. In a world of endless fiat money printing and financial uncertainty, Bitcoin offered something truly revolutionary, a fixed supply of 21 million coins that could never be inflated away. This realization set the stage for a bold move that would send shockwaves through the corporate world. MicroStrategy was about to make its inaugural Bitcoin purchase, a decision that would transform the company's strategy and position it as a leader in corporate Bitcoin adoption. The impact of this first acquisition was immediate and profound, sparking a conversation about Bitcoin's role in corporate finance that continues to this day. The Bitcoin accumulation phase. MicroStrategy's initial Bitcoin purchase marked the beginning of a revolutionary strategy in corporate treasury management. As Bitcoin's price fluctuated, Michael Saylor's conviction grew stronger, leading to bold moves that solidified MicroStrategy's position as a Bitcoin powerhouse. The company's accumulation phase was characterized by increasingly large acquisitions. A typical purchase in 2024 added 7,420 Bitcoins to its holding, investing $458.2 million. This brought the company's total Bitcoin treasury to 252,220 Bitcoin, acquired at an average price of $39,266 per coin. To finance these massive acquisitions, MicroStrategy employed innovative financing strategies. The company leveraged its strong financial position, utilizing $800 million from a previous capital raise. This significant war chest allowed MicroStrategy to continue its Bitcoin accumulation even during periods of market volatility. MicroStrategy's actions significantly impacted the broader Bitcoin market. The company's large-scale purchases often coincided with price rallies, leading some analysts to speculate about the MicroStrategy effect on Bitcoin's value. The concept of Bitcoin as a treasury reserve asset represents a paradigm shift in corporate finance. Traditional assets were being re-evaluated in light of inflationary pressures. Bitcoin, with its fixed supply and potential for appreciation, offered a compelling alternative. As MicroStrategy's Bitcoin holdings grew, so did the scrutiny from shareholders and market analysts. The company's stock price became increasingly correlated with Bitcoin's performance, leading to heightened volatility. To address shareholder concerns, MicroStrategy introduced a new key performance indicator, BTC Yield, with a target range of 6% to 10%. The culmination of MicroStrategy's accumulation phase has resulted in a Bitcoin treasury of truly monumental proportions. With over 250,000 Bitcoin under its control, MicroStrategy has transformed itself into one of the largest corporate holders of the cryptocurrency in the world, positioning itself as a major player in the Bitcoin ecosystem. The MicroStrategy Metamorphosis. Wall Street was left reeling as MicroStrategy's Bitcoin strategy transformed the software company into a Bitcoin powerhouse. Analysts scrambled to make sense of this unprecedented shift, their traditional valuation models crumbling in the face of a new paradigm. The lines between corporate structures and digital assets blurred, challenging long-held assumptions about corporate finance. As MicroStrategy accumulated Bitcoin, a quiet revolution unfolded in the stock market. Investors were no longer simply buying shares of a software company, they were effectively betting on Bitcoin's future. The correlation between MicroStrategy's stock price and Bitcoin's performance became undeniable, reflecting a new reality where the company's value was intrinsically tied to the cryptocurrency's fortunes. This metamorphosis presented unique challenges. Balancing the core software business with an aggressive Bitcoin acquisition strategy required precision and foresight. MicroStrategy navigated the volatile cryptocurrency markets while maintaining its operational integrity as a software provider. This dual identity created a complex risk-reward profile, forcing investors to re-evaluate traditional metrics. In response, MicroStrategy introduced a novel key performance indicator, Bitcoin Yield. This metric measures the company's ability to generate value through its Bitcoin holdings. With a revised target range of 6 to 10%, MicroStrategy signaled its commitment to maximizing returns on cryptocurrency investments. The impact on MicroStrategy's stock performance has been profound. Despite short-term volatility, the company's shares have demonstrated remarkable resilience. MicroStrategy's stock price has increased over 700% over the last year, validating its bold approach to corporate treasury management. This dramatic increase in stock value underscores the transformative power of MicroStrategy's Bitcoin strategy. Early investors who recognize the potential of this unconventional approach have reaped substantial rewards. The company's performance has not only validated Michael Saylor's vision, but has also paved the way for other corporations to consider Bitcoin as a viable treasury reserve asset. As MicroStrategy's stock continues to move in tandem with Bitcoin's price, it raises intriguing questions about the future of corporate finance. The boundaries between traditional financial instruments and cryptocurrencies are eroding, with MicroStrategy at the forefront of this paradigm shift. I'd like to take a moment to thank the sponsor for this video. Caleb & Brown is the world-class Bitcoin brokerage who can help you get into the game to buy and sell Bitcoin in a safe way. Whether you're buying for the first time or expanding your portfolio, Caleb & Brown's dedicated brokerage team offer you unparalleled support and expertise. Enjoy peace of mind with their secure cold storage and unlimited access to your personalized broker. Click the link in the description to get started today. The 21-21 Plan, a new paradigm in corporate finance. MicroStrategy's 21-21 Plan is set to challenge every assumption about corporate treasury management, potentially unleashing a tidal wave of change across the financial landscape. This audacious gambit isn't just about buying more Bitcoin, it's a complete reimagining of corporate finance that could change the game for everyone. At the heart of this revolutionary plan is an unprecedented capital raise. MicroStrategy aims to amass a staggering $42 billion over the next 3 years, with the sole purpose of acquiring more Bitcoin. The company plans to achieve this through a combination of equity offerings, debt issuance, and strategic partnerships, leveraging its position as a leader in the Bitcoin space. Phong Le, president and CEO of MicroStrategy, articulated the company's vision, stating, quote, "As a Bitcoin treasury company, we plan to use the additional capital to buy more Bitcoin as a treasury reserve asset in a manner that will allow us to achieve higher BTC yield. The effectiveness of this strategy is already evident, with MicroStrategy reporting a BTC yield of 17.8% for Q3. However, the 21-21 plan is not without its risks. The sheer scale of the proposed capital raise poses significant challenges. Market volatility remains a constant concern in the cryptocurrency space, and MicroStrategy will need to navigate these turbulent waters with skill and precision. Moreover, maintaining shareholder confidence throughout this ambitious process will be crucial. The implications of the 21-21 plan extend far beyond MicroStrategy's balance sheet. If successful, the strategy could have a profound impact on the Bitcoin market itself. The acquisition of such a substantial amount of Bitcoin over a relatively short period could significantly influence supply and demand dynamics, potentially driving up the price of Bitcoin. Furthermore, MicroStrategy's actions could serve as a catalyst for broader corporate adoption of Bitcoin. Imagine a scenario where several Fortune 500 companies adopt similar strategies, allocating even a small percentage of their treasuries to Bitcoin. This could lead to a new era where Bitcoin becomes an integral part of corporate treasuries across various industries, fundamentally challenging the norms of corporate finance. As this bold strategy unfolds, it will undoubtedly be closely watched by investors, corporations, and financial institutions worldwide, potentially ushering in a new chapter in the evolution of money and corporate finance. The future of finance is being written. Are you going to join the story? If you enjoyed the video, please be sure to leave a like and subscribe to Bitcoin Basics to never miss out on the latest videos. Click the link on screen to watch the next video from Bitcoin Basics.